Hello everybody, welcome to the technical analysis webinar this afternoon. My name's Troy, I'll be leading the session. Give me a quick okay if you're hearing me clearly and seeing my screen all right. Just type in the chat box if you would. Hello Nico, welcome. All right, I've got enough responses, thank you. Looks like we're good to go. So quite a bit happening in the markets today. Obviously, a lot of volatility still because of the coronavirus situation. We've had some news over the past 24 hours regarding oil that's caused some tremendous movements. And we'll take a look at how you could have and still could take advantage of these large movements and go after what could be substantial profits potentially. So let's have a look first at a few fundamental things, and then we'll take a look at the technicals that go along with these movements. Now, keep in mind, all investments have risk. There's no one trade that's guaranteed the profit. I think we all understand that as we go into it. Whether you're trading spread betting, CFDs, Forex, options, obviously there's risk entailed with this style of trading, but also we all understand that there's good potential for profit, and you should manage your risk in a way that's appropriate, but the potential for profit is certainly there, which is why we're all involved in the first place. Now, keep in mind that what we cover is meant to be educational in nature and is not meant to be taken as financial advisement. Now, as we go forward, keep in mind there are a couple different ways that you can use technical analysis. We'll be leaning on the manual methods of technical analysis in today's webinar, drawing our own lines, finding our own price levels. Hello, Lexington, welcome. And we won't be making use of any indicators today, although indicators can be helpful to let you know when something is overbought or oversold. You have to combine to be in the best circumstance your knowledge of the fundamental news as it has happened most recently, and then apply the technical analysis along with it. And usually indicators are giving you good signals in one direction if the fundamental news is really strong, and bad signals in the opposite direction. Lexington, okay, he's saying there's no sound, but obviously there's sound because the rest of you typed okay. So just give me a second. Okay, letting them know it's just him. Okay, so let's take a look. What's the latest fundamental news? And then we'll get on the charts and see maybe why did oil do that right there, and what maybe we can expect to continue moving forward. As we go forward, keep in mind when there's a lot of volatility, sometimes the movements are unpredictable. There can be risk that is involved that maybe you want to manage in different ways. And one way to manage risk is if you use our AvaGo mobile app, which you can find under trading platforms, AvaTrade Go. You can download the mobile app here to your mobile devices. Once you have that, then there is a feature on the AvaGo app called AvaProtect, okay? And AvaProtect, let me find it here, should be on our platform with some explanations. Let's see if we have a feature. Here it is. It's under trading info, okay? AvaProtect. Okay, so the app is under trading platforms, AvaTrade Go. The feature that's unique to AvaTrade Go, to that mobile app, is under trading info, AvaProtect. Okay, and so again, you can download the app from here, and on this page it describes what is AvaProtect. And what you see is there's protection against losses for defined time periods. It's a really unique feature. Any losses during the protected time period for a flat premium cost is added back, no matter how big the losses would be. And so it's something to check out. If you have any questions about it, read this page. There's a video about it down at the bottom of this page. And you can obviously ask your account managers about it as well. Okay, so what's going on in the news real quick? Futures are red. Okay. Right now, they're less red than they were a little bit ago, so they seem to be recovering a bit right now. But they've been pretty much red through the day today. And if we look at why has that been the case, you see some really bad PMI numbers came in, okay, and other numbers. But PMI numbers, that's Purchasing Managers Index, which gives a good grasp of what the economy's doing if purchasing managers are increasing or decreasing the amount of purchasing. And the numbers were all in the red for the most part. Retail sales were up on these announcements, but it makes sense because a lot of people running out and stocking up on items because of this coronavirus. So these numbers were really bad, and some of the headlines talked about it. Here's another kind of gloomy headline: UK facing depression-style hit. This was a positive thing. OPEC and other nations, OPEC plus, they're calling it, OPEC, the United States, Russia, they're debating really big oil production cuts. And what does that do to price? If oil production is cut, what happened to the price of oil yesterday? Because just from talking about cutting production, what happened to the price of oil? Did anyone notice? Yeah, it rose, that's for sure. It went flying up. And what we're looking at when the price goes flying up even before the cut, right? They didn't cut production yet. They're just talking about it. It's speculation, okay? They're speculating that the price should go up. Everyone starts buying oil and it drives the price up even before the production was cut, right? Because right now there's still the same oversupply of oil, the same lack of demand for it, but somehow the price went flying up 20% or more. And that's because of speculation that, hey, they're going to cut production maybe now soon, so let's buy on oil now before the price goes up. And that causes the price to go up. So that happened with oil. What currencies specifically, and there you might think of a couple, what currencies might have been smart when you saw this article? And this happened yesterday, okay? Donald Trump in the US announced that he was going to hold meetings between the OPEC nations and Russia, and that they were going to easily work out a deal to cut production, and oil started climbing for hours after that. What currencies probably climbed for hours after that as well? What currencies are expected? Yeah, USD CAD was a good combination. That would be going with the CAD, so USD CAD would probably be dropping potentially. Maybe more specifically, if you're trying to go with the Canadian JPY might make sense. Why is that the case? Why would Canadian JPY, if you're thinking Canada is a big oil seller, okay? The percent of their GDP is very high for oil, so oil price affects Canadian dollar strongly. Yeah, if you do Canadian against the yen, typically when there's good news for something like the oil industry, then the safe haven yen weakens. And if the yen is weakening and the Canadian is strengthening, then those two would probably have a better movement to go with the Canadian, with good Canadian news on oil, rather than going USD Canadian, where the USD might have liked the fact that there would be an oil cut because the USD produces a lot of oil. So the US, I should say, produces a lot of oil. So maybe the better combo was Canadian JPY, but we'll look at USD Canadian as well, because oil is a bigger percentage of Canada's GDP than it is US. Even though US produces more oil than Canada, it's a bigger percentage of the Canadian GDP. So typically oil prices have a bigger effect on the strength of the Canadian than on the USD. Okay, good points. So let's then take a look. Let's see on the charts, understanding the fundamentals, what we're talking about here. Let's look at my demo account and see what happens. So this is oil, okay? We see what happened with oil through the roof, okay? It was just looking for a reason to climb, right? It kept coming down around 20, teetering around 20. It did this over the course of a week or two. It kept coming down around 20, 19 and a half. And then boom, the first sign of good news for the oil market, and there it went. And we talked about in past webinars preparing pending orders just in case there was a deal with OPEC and Russia. Prepare pending orders just in case the unexpected happens. Because remember, there's two types of fundamental news: the type that are scheduled, like those PMI announcements that were scheduled for exact countries and times today that we saw were really negative. But the other type of fundamental news is the unexpected, extraordinary fundamental news, like Trump all of a sudden saying, hey, we're going to get an oil deal. And boom, oil goes flying up. What kind of pending order could you have had waiting? We talked about this last week with this exact price level, actually, above 21.5. And then some of us said, well, you could be more patient and say above the other price level, above this gap, okay, from last week. So this gap price, this was back on Friday, and this was earlier this week, I should say. So we had a webinar on Monday. So we're talking about the gap price up here from Friday is the price we were looking at. We said what kind of pending order above this gapped price could have been waiting for unexpected good news on oil? Because this week on Monday, we saw oil gap down, right? And so then we were saying if there's good news on oil, it could break this resistance here. Yeah, it would be a buy stop. So we talked about Monday preparing potential buy stops. We talked about selling oil from this resistance up here, from this gapped price. If it fills the gap, you sell. And that was working, selling off of the Friday's close. It gapped down, it filled the gap. You sell from Friday's close because it gapped down at the open and it dropped right off that gap price, just like you'd expect. But even when you were selling off of this resistance level, you prepare a buy stop in case unexpected news comes and it blows through. Well, here it was. This was payday right here. The buy stop paid off here. Any pending order above this resistance, just waiting for some breaking story to cause that resistance to break. And this is a classic breakthrough candle right here. Okay, this candle hit the resistance and went flying through, and there it went. And more specifically, earlier it broke through, and then that became support, and then it went flying up. Okay, so there was some inkling of what was happening here. It broke through. You'd already be in on the trade here, holding, and up it went. So easy profit, simple technical analysis strategy, preparing for the unknown type of fundamental news, the extraordinary news that could break at any time, putting pending orders, in this case, above a resistance level that you know that it would have to be good news for oil in order to break above it. And boom, there was the news and there it went. That would have been a healthy profit. Type okay if you're with me on that. Placing pending orders, even in the direction that's the opposite of the current fundamental news, so that technically speaking, you're beyond, in this case, a resistance that you know it would take some big news to break. And if it does, you expect maybe what you see here. Okay, so if you weren't in on that from Monday's talk, you can still apply the same strategy concepts in the future. There's no reason why you can't. And on other assets. Right now, many of the indices have dropped quite low. Okay, the lower they keep dropping, the more you could start preparing buy stops above nearby resistance levels on some of the major indices, just in case there's some breakthrough treatment or something for this coronavirus. If some good news comes eventually, you could see a huge blow through a resistance level, just like oil just did. You could see the same thing happen on the Dow Jones, S&P 500, the DAX, the CAC, all of these different, the Nikkei, all of the indices around the world could respond quickly with unexpected big good news, right? So you can prepare, technically speaking, find the resistance levels. This was clearly a resistance level. It gapped down from there. It formed resistance, simple buy stop above the resistance, waiting for good news, and there it went. Okay, now the question is, let me get rid of all these lines. Now the question is, okay, good if you did profit from that. And if you didn't, the question is, what do I do next? How can I try and take advantage of now? So let's look at 4-hour candles. Let's see what's happening. By the way, how do you know when to take your profit on that move? Had you gotten in on the buy stop? Look how perfectly it stopped at the prior resistance level. If anyone thinks that that technical analysis really doesn't have anything to it, that they're just random movements on the chart, look at this. The breakthrough happened right at the old resistance level. Here's the breakthrough candle. Where did that breakthrough stop? Look at the line. Look at the wick. Exactly. Stopped and pulled back on the old support level over here. Support, support, breakthrough becomes resistance. So you have a breakthrough of the smaller, lower resistance here to get entered on your buy stop. It climbs, and where do you have your take profit programmed? You could have already looked at the 4-hour candles like I'm doing now, and when you programmed your buy stop, you'd have saw, okay, here's an old support that will likely be resistance right in this area. So you could have had your take profit right in this range. Technically speaking, it made total sense. Okay, now here's a question. It's at a major resistance level right now. What could you prepare above this resistance in case it breaks through again? Another buy stop, right? Could have a pending order. You see these wicks right here? If it gets above that, it must have been really good news again, right? If it not just breaks this resistance line, but gets through this wick, if it gets above that level, that's probably a sign that there's more strong momentum. So you could prepare a buy stop up there in case more good news breaks, like they actually sign a deal, right? And you may see this resistance level break and it might run up. Where would your next take profit be? If you get in on a buy stop here, well, here's the next resistance level right up here. You see? Resistance, 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 old gap down became resistance. Same as what happened down here. Okay, so if it breaks through here, breaks this next resistance, hits a price above all of this resistance here, your buy stop kicks in, your take profit you could program near the next resistance point. And okay, David, I'm preparing for the unknown with the buy stop. David is asking, well, what about selling right now? Exactly. You can prepare for the unknown, a buy stop up here. You can also say, what I know is this slowed down at the resistance point. And I also know there's a global pandemic and fears about global recession. We just read an article about UK fearing recession. We know the US is worried about recession. We know China is worried about a recession. So, this was excitement about a potential deal. Is there a deal yet? There's not a deal yet. So maybe some of this excitement pulls back now. So it's at a major resistance level. You don't have to risk much because you say, okay, let me sell. You can do a market sell now. You don't have to do a sell stop. It's below the resistance. It's already below the resistance. So you don't have to program a pending order to sell. You could just do a market sell now. And where do you put your stop loss? Above what? Where do you put your stop loss if you do a market sell now? Maybe the same location where you'd put your entry on your sell stop. Above all of this resistance right here, the old support, and above these wicks in case it tests with a wick again, matching this wick. If your stop loss, if you do a market sell, you put your stop loss above the resistance and above these wicks. If it breaks through and hits your stop loss, it triggers your buy. Must have been good news for oil if it breaks through. If it breaks through that high and hits your stop loss on your sell, you trigger your buy and hopefully then it runs up on your buy, right? So in this case, you're not trying to guess the market. You're not trying to be right. You're just trying to be smart. Small risk to sell with large potential profit if it drops back down. Small risk if it breaks the resistance. Buy stop up here with large potential profit if it runs to the next resistance, and small risk if it reverses back down to your stop loss. Okay, so this would be a combination move potentially where if you believe it should pull back down, and I'm not here to tell you it will, I'm saying there's a potential it'll pull back down, and trading's all about potential. If it pulls back down, you've got a larger distance to the next support level than you do, then you'd have to risk to get through the current resistance level to your stop loss. And then the buy stop would be vice versa. larger potential profit rise to the next resistance level if the buy stop was triggered, smaller risk to get below what then would have been this broken resistance. Okay. Now on the market sell, if you were deciding to do that, you might wait for a downtrend here. Okay. So you might wait for a downtrend. If these candles on the 15-minute or the 5-minute start to go to lower points going down like this, you see how these were going higher, higher, a staircase to heaven here. If the staircase starts to go down, then that might give you confirmation to go ahead and do your market sell. As long as it's still uptrending, you might say, I'll wait. It's at the resistance, but maybe you wait for a downtrend to start, then you sell. Everyone's different on that in terms of their preference. Okay. And if you were waiting for a downtrend, then David, a sell stop would make sense, right? If you say, okay, if it drops below this support level here, then I sell. If you say this would be my entry, if it drops below this little support, here is a support level. It tried to drop, went up, tried to drop, went up. So here's a little support level. If it drops below that level, maybe that in your mind confirms a reversal and you program a sell stop to sell from down here. Right now, maybe you're not convinced that it's going to reverse down off this resistance. So you can wait to see the reversal before you get in. Some people just say it's at the resistance, I sell now. Some wait to see the reversal, which gives you confirmation of the downtrend starting. And many times that works out maybe a little bit better. You give up some of the distance down, some of the potential profit, but then you're more sure about the direction in your mind. Either option's okay. I tend to prefer to wait to see a slight downtrend before I sell down off of a resistance like this. You see right now it's testing the resistance. It didn't break it, it's testing it. And it might go through like you see here. You see this wick? It tested it, then dropped. So it would not surprise me to see it test it before potentially dropping. Or if it breaks through all the way, you trigger your buy stop. Okay. All right. Any questions? Any points to make here? We wouldn't say it truly broke the resistance till it breaks these wicks, right? The wicks here. It's testing the resistance right now. Okay, good. Let's take a look then maybe at an indice or two. And we could look at maybe the DAX. Okay. What do we see technically speaking on, let's go closer, 1 hour candles? I see resistance right here. Okay. Resistance, 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 resistance again. This is the 4th time it tried and it's dropping. So technically speaking, a market sell here certainly could make sense with a stop loss right above this resistance here. Why would I trust the resistance level? We just looked at all the bad news, all the bad articles, and specifically out of the European Union, the UK, there were bad announcements today. Bad PMI numbers, bad almost everything numbers, except for some of the retail sales were up. So this is dropping as we speak. That would be profiting off that resistance quite easy. Where's the next support level on this? Let's go to 4 hour candles. Okay. I think it was better on 1 hour. And the support level looks like it's down here. Okay. Support, support, and up. So you've got a potential profit down about 3 times the distance to the risk to the upside of the support. And you see this drop off of the resistance. If we look like 15-minute candles, you can see it better. Okay, resistance, 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 resistance. It got close and down it went. Okay, classic reversal going with the fundamental news with a technical entry point that makes sense. And it's not too late to get in on that if you believe that the news is truly bad for the markets today. Any questions? Okay, let's maybe take a look at one or two more assets. It's going to be a similar story on all the indices. If we look, the Nikkei, okay, also starting to drop on the 15-minute candles. We could say, let's try 30-minute. We see there was a couple resistance levels here, one up here, resistance, resistance, resistance. I was looking at this yesterday, coming down off this upper resistance, and we see it just reversed off of this resistance level here, resistance, 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 okay, and it got near it and down it went, okay. Your support is down here, so this is right in the middle of this resistance, this mid resistance level, and this support. Looks like it's on its way down to the support level down here. Then the next question is, if it hits this support, what do? Do you buy off this support when there's bad news, bad global economy news? You might choose not to go against the bad fundamental news for the indices. And specifically, I know Japan is worried that they're near an outbreak of this virus in Japan as well. So trading down off of resistance seems to be working well the past few days. And if we look at the bigger picture, 4-hour candles, look at this support level where it's dropping currently on the smaller candles to this support level here. What happens if this support level here gets broken? Look at this support. Where's the next support level on the 4-hour candles? It's quite a ways down. We're talking way down here, 16,000 or so. So what kind of pending order could you put below this support in case it breaks? What kind of pending order would sell if it breaks below this support level here? You could see a plunge potentially. A sell stop, exactly, sell stop. So I kind of like the idea of going after a potential profit with a sell stop, entry point somewhere below this current support level down there, with then your stop loss back above the support. Okay, it would be a limited risk move set up that way. If it breaks the support and you enter on a sell stop, stop loss just back above the support, limited risk move. And if it does like this did, when it broke through to go above, look how quick it ran up. You see breakthrough of this resistance level and whoa, it went flying up. So if it breaks through on the way down, it could repeat this candle, only if it's a breakthrough down, it could repeat the candle in the opposite direction like this one did on the way up, breaking through. If it breaks through, it could reverse that momentum that it took to break through on the way up. Okay, it's kind of how you read these price levels. It took a lot of strong momentum to break through to go up. Look at it. So to break through this resistance and go down, it probably would take as much strong momentum in the opposite direction. No guarantee, but you look at the chart and you say trading is about potential. And the potential is there for a really strong run down if the support breaks. We know that because that's the type of momentum it took to break back above it just a couple of few days back. Okay, so I see this as a great potential opportunity to get in on a movement that could pay well with limited risk, which is always nice. Okay. Let's then take a look at gold. Someone's asking about gold. So let's look at gold and we'll call it quits for today. We don't want to cloud things up too much. So gold ran up with the good news on oil. And you might say, why would gold climb with good news on oil? Good news, gold being a safe haven, you'd think gold would drop. Well, things have been bizarro world with gold lately, and let me explain a little bit. People buy gold typically as a safe haven for when there's a catastrophe and they need money from the value of gold, right? So small things that are going bad tends to make gold go up. You know, bad jobs numbers, bad production numbers. People start buying gold. Gold is rising, going up, 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 preparing for a potential time when when an economy could completely crash. They want gold so they can cash the gold in. As other things dropped in value, gold was going up. So gold went up 1,200, 1,400, 1,600, 1,700 over the past months. And all of a sudden, this coronavirus caused the fear that total economies could crash as the stock markets were giving back 3-4 years worth of gains in 2 weeks time. That was viewed by many with gold as a time to take cash. Okay, so people were cashing out gold to have cash in hand because of how big this potential emergency is with this pandemic. So people wanted cash in hand because you can't go pay your business bills or your mortgage with bars of gold. People were cashing the gold out to have cash on hand for the catastrophe that was happening with this pandemic. So fear drives up gold, but too much fear and complete crashing causes people to cash out gold. So they have cash, which was the reason they bought gold in the first place, to have something of value once everything else potentially crashed. Why did they want something of value? So then they could get cash out of it. So that's what has been happening. So now as you're seeing good news, like this good news on oil, gold went up. Why? Because people think it's safer now to buy gold and get the cash out of my hands. And they believe I'm buying gold during good news because the larger picture over the next year, they believe is bad news, meaning recession in multiple countries, potentially a global recession. And so as there's good enough news to not think, everything is completely crashing economically in these different countries, if there's anything that makes you to have some hope, then people feel safe enough to take their cash out of their hand and buy gold again. So gold is going up right now with little breaking stories of good news. And when the news seems even more catastrophic, gold has been going back down because then investors are saying, I need cash in my hand again. So it's kind of the opposite right now. Bad news is causing gold to go down and good news is causing gold to go up. Eventually that'll flip back to what's normal, where as this coronavirus, this pandemic gets under control, let's say a month or two from now, or more under control, then things will stop being so crazy, and you might see that gold goes back to climbing with bad news and going down with good news, which is not what's happening lately. Okay, so with that said, let's look at the technicals. Let's ignore the fundamentals for now and say, okay, gold has formed a bit of a resistance right there. Okay, I see resistance on the 15-minute candles, resistance down, it tested it again and down. So if you're a scalper, you could say, technically speaking, I see resistance, I could sell right now, and when it comes down, if it comes down to my first support level, maybe here, I could take my profit. And to get above this resistance, I'm only risking from 16.19 to 16.22. So I'm risking $3 to make from 16.17 to 16.08 to make potentially $9. So 3-to-1 ratio, risking 3 to make 9. Boom, you place it, you go with your technical analysis off the resistance, and you live with the risk of $3 to your stop loss off the resistance. Okay, that's pure technical trading. I think that will work good with gold over the coming weeks because the fundamentals are so out of whack and so unpredictable with breaking stories constantly. You could do quick scalping moves on gold if you're into short-term trading. If you're into the bigger picture, long-term trading, no problem. You don't have to worry about these small moves. You don't have to worry about spikes up and down of $5 or $10 if you're in it for the next 6 months or next month for a move. You're taking a different approach. But right now I'm showing the potential for scalping with the volatility that's going on now. There's a lot of reaction at resistance points. Okay, this already dropped off this resistance point here once. Now it's dropped off twice. You could be moving in profit and maybe take a nice profit if it dropped further. What could we prepare above this resistance in case it breaks through? Up here. If it breaks through above this wick far enough that you deem that as a breakthrough of this resistance, we could have a buy stop ready. So you could have already done a market sell and had your buy stop above this ready as well. Okay, and if we go to 4-hour candles, you can see bigger picture, bigger resistance up here. If you're more of a longer term trader, you could say, okay, I'm selling on gold and I'm selling all the way down to here. And my stop loss could be up further, way up here, above this resistance, resistance. And as a longer term trader, you wouldn't care if this goes up $5 or $10 because you're looking at, maybe $60 drop, $50 drop that you're going for, and you're willing to risk $5 or $10 in the bigger picture. So these are different styles of trading, right? Different styles of trading, whether you're scalping small moves or whether you're looking at bigger picture moves. And given that it's at a resistance here, if it breaks that resistance, you've got a good potential that this could climb to the next resistance level. So you start to find these price levels on the chart and you take your shot. And if it's wrong, you're risking not so much. And if you're right, you have a much larger potential profit. Okay. Any questions on anything we've covered? I think this is a good place to stop and let you all move ahead with maybe going after some of these movements that are occurring right now. Okay, great. Thank you everybody for joining. Good luck with the trading. I think you're going to see big movements on gold, oil, and the indices today, especially. And pairing the Canadian with the yen, I think is a smart move as well. Okay, to get some movements as oil is moving one direction, Canadian a lot of times follows, and paired against the yen usually is a good combination. All right, everybody. Thank you for joining. Bye for now.